guest, Eric Robertsen. He's Global Head of Research at Standard Chartered Bank. He's joining us from Sydney. Great to have you with us on this Monday morning, Eric. And just continuing on from that theme then, what Em was talking about, I mean, you've got a specific view on emerging markets. Outline that for us.
Sure. Look, it's no secret that there's been quite a bit of pessimism and skepticism growing into the market narrative about emerging markets' growth prospects and the potential returns for their asset classes. And we think that view has become too pessimistic. A couple of clouds that have weighed on the markets have been fears of Fed tapering. We think that's now extremely well telegraphed and built into the price. Concerns about COVID. We've seen significant improvement in vaccination rates across countries like Singapore, Malaysia, India as well. And we think that the positive impulse from that for the region is underappreciated in asset markets. And then as Emily was talking about, obviously the big uncertainty with regards to China and the real estate markets there is probably the biggest uncertainty still weighing on markets. But we argue that at current valuations, broadly speaking, EM is starting to look very attractive.
Yeah, and picking up on the Evergrande point, Eric, just how concerned are you that this represents massive systemic risk and could have huge ripple effects throughout APAC and the rest of the world's economies?
Well, there's no disputing, Rosanna, that there's potentially large risk to both China's economy and to the regional economies. But that's if you assume that the government just lets the company go. And all indications that we've seen and that I think are publicly available would suggest that that's not going to be the case. What we are seeing is a decline in the credit impulse. We are seeing real estate as a sector, consumer spending more broadly, struggling a bit in China's economy. We would argue that while the rest of Asia can't be completely immune to that there are some very good growth stories in the region. Exports out of Korea, Indonesia, and a few of the other economies still look very strong. And so, look, you can't ignore the impact of China, but I think that there's enough positive momentum elsewhere in the region to partially mitigate that. And that's what we're focused on.
Now, that's interesting you should say that, because we spoke to Timothy Moe of Goldman Sachs in the first hour of the show, and he was making a case for Indian equities, given the robust IPO pipeline we've seen during the pandemic, saying that any investor in China potentially could start pivoting towards India. Is that a view you'd align with?
Well, look, we don't specifically cover regional equities, but I would share some of Tim's sentiments in the sense that as investors in the region start thinking about where there are growth opportunities, where there's good value, so to speak, you will see a rotation. And we do believe that India's economy in the second half of the year and into the first half of next year is going to remain on a fairly good trajectory, aided in part, by the way, by a central bank that's been very clear and very vocal about the fact that their monetary policy will be supportive of growth. And so, and by the way, I think you can make that case for a handful of other economies in the region. So I think we will see some asset allocation.
And with broader China in mind, also, we're just keeping an eye on the Hong Kong market, just letting you know, Eric, that it's down now over 3% in trade. We'll go back to Emily Tan for more details on that throughout the show. But I want to ask you as well about another market that we do like to focus on quite heavily, especially on Mondays, and that is Korea. Now, you have a view that valuation front Korean equities are actually trading at their deepest P discount to US peers at the moment. Is Korea an attractive market?
Well, we think so. And full disclosure, we have thought so for most of the year. We have seen a fairly significant amount of foreign investor outflows from Korea's market. That has surprised us. But as I mentioned earlier, we're seeing very good economic momentum. The trade statistics remain very good. And we think fears over the technology sector in Korea are fairly significantly overstated. There are other sectors in Korea's economy, whether autos or shipbuilding or petrochemicals, that are showing very good momentum as well. And by the way, the Bank of Korea is starting to normalize monetary policy. So we think there's a number of very supportive factors for a rotation into Korea's asset markets.
Certainly, yeah, Bank of Korea was one of those early movers. We were just talking earlier in the show, got around 13 central banks making some sort of announcement this week, so let's see who follows suit. Now, I just want to do a little focus on ASEAN, Southeast Asia, because, you know, the COVID situation in Thailand, Malaysia, Vietnam, still pretty bleak. You do have pockets, as you said there, like Singapore, well vaccinated. But what is your view generally on this region?
Look, I think it's a question of sequential improvement. In an ideal world, we would have a synchronized economic recovery led by synchronized improvement from the COVID situation. It's not going to work like that. We're going to see different economies in different countries emerging from lockdown at a different speed. But the net direction of travel, we believe, is going to be quite positive. At the moment, Malaysia, Singapore, India doing very well in terms of the vaccine trajectory. And we believe that by the end of the year, some of those other economies, you mentioned Thailand, Vietnam as well, are going to start to see more significant improvement. Now, Thailand's an interesting case because the trajectory of vaccine cover is really important to the tourism sector, which is such a disproportionately large sector in the overall economy. So we do want to see vaccination cover improve and improve quickly. But overall, we remain fairly constructive on the region.
And on this, we thought quiet day, Monday session, a lot of markets closed. Eric, we'll look at the Hang Seng Properties Index down over 6%. So once again, we'll get over to Emily Tam for more details on that as and when. But it's been great talking to you, Eric Robertsen from Standard Chartered Bank. Thanks for your views across the whole APAC region.